Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 10th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. At the end of the day, the reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot going on today, as it being a Monday, usually not a whole lot of economic data released here in the United States and or across the pond, but we did get industrial production out of Italy, came in at 1%, was expected to be 0.4%. We also later on today, 10 minutes after the close, Janet Yellen speaking, who is the FOMC Fed chair. So we'll have to see how that works out. She's speaking after the close, so it shouldn't really be market moving, but could offer the futures an opportunity to kind of juke around, depending on what she says. Anyway, on to the overall markets. We've got crude oil right here, up just slightly on the day, and actually moved the volume profile node a little bit higher, where the point of control is just slightly higher now. So building in this, remember we just saw the time volume profile move down earlier on, and now it is kind of back up a little bit higher again. We'll have to see how that works out with my theory of it going back down to this area and testing that. We're kind of building up a volume node up here, which is saying that the market is gaining acceptance at these levels. So that is pretty important, that it could be pulling away from that area that I was looking for as a target. So could have to start rejiggering positions based upon that move. Then on to gold. Continuing to trend sideways, albeit it is above the 9-day moving average, stuck right there at the point of control where the most volume and time has been spent, which is really a magnet. It's going to kind of spend a little bit of time there before it really starts moving. But we got to keep an eye on the 50-day and the 200-day moving averages getting ready to cross. I think sometimes they call that a golden cross or something like that, where we see that move happen, which would indicate bullishness in this underlying. So keep your eye on that. It is very close to being a crossover, which I've been talking about for a few weeks, but it looks like it's definitely going to happen this week, if not later on today. It's pretty close, so maybe a couple days yet before that happens. But like I said, that looks like it's almost inevitable at this point. Then we've got the bonds up on the day just by about a half a point right now, and again stuck right on its volume and time node. That's going to really act as acceptance there. Again, not a whole lot to see there. Pretty much the market's priced in all Fed moves so far, as they have really kind of choreographed this. So the market's not really looking for anything like a lower interest rate environment, which would be indicative of a rally in the bonds. So I don't think we're going to be seeing that, but I think that it could just trend sideways here for the foreseeable future. Not a lot of fun trading bonds right now. And then on to the Dow. Now with the equities, we've got a mixed bag right now. We've got the Dow Jones up on the day, but just below that 9-day moving average, losing a little bit of steam. And what we've been seeing is the NASDAQ leading the way for the most part, and NASDAQ is slightly in negative territory, down about 2 points on the day, while the Dow and E-mini S&Ps are up on the day, but just a really pretty quiet day. This is the E-mini S&Ps slightly in positive territory by about 1.5 for the most part, looking like a very inside day, as we can see on the breakdown 30-minute chart of the E-mini S&Ps, just slightly outside that inside day, if you will, but we right now are trading back down into where the value area has been, where the volume node 4 time has been spent. And really, if you just look across here, you can see that, that's pretty easy to see that we've been spending a lot of time at this area. So not anything really shocking there for the most part. Then on to my overall trades. This is XLK. This is a trade that I just decided to put on with a bit of a pullback in the NASDAQ. While we're having a rally in the broader markets, I decided to add some trades in here to get a little bit long XLK, which is the ETF for the technology sector. They've had a pretty good run, but we can see that the implied volatility is moving higher. It's actually up into the 40s. So I decided to try and take advantage of some of that with higher premiums, and went into the May and sold the 51 puts in there for 32 cents. So I'm looking to try and get a little bit of pop in there and maybe get out of that. 51's a pretty far down here for this to fall to get those in the money, if you will, in the next 30 some days. So decided that was a pretty good risk reward at this point, especially with the strength in the tech sector as of late. Then on to Macy's. I haven't gotten out of this trade right now. It's kind of back and forth. Right now, you know, I sold this, they were the April 28.5 puts in there, and I originally collected about 50 cents for them. And with the little pop today, I was able to look at trying to get out. I'm working a little bit better than 50% the width of my strikes, or 50% of my max profit, so around a quarter. I'm trying to work these out for around 20 cents as of right now. So you know, I always talk about, do I want the penny or do I want the trade? Well, right now it looks like I feel like I want the penny, so that I'm not too anxious of getting out of. So just kind of working that for a little bit better price. Hopefully if I get a little bit of a pop, I'll be able to get those. So touch and go right now as we speak. So just kind of working that trade to see if I can get a little bit better price. All right, that's about all I got for you guys. Friday's webinar went off really well. We had a ton of people in there. That was really good. A lot of fun, back and forth feedback. This week we're going to be continuing this earnings segment where we're doing several different strategies wrapped around earnings trade. So a lot of you guys like to trade those earnings. So we've done a series, or set up a series for that. So last week we did the short calls. Now we're going to be doing the short puts and short put spreads, and then we'll continue on with the iron condor strangles, and then I'll show you how to defend those. So sign up for this series here. It's a really great deal. Go to protraderstrategies.com and sign up for that. That's all I got for you guys today, other than if you can't take that, take it easy.